All right. So let's take a look at what's going on right now. The first thing I want to say before we get into this is I want to make sure everybody understands what's going here. The process of detecting liquidity. There's a pretty strict set of rules for how it works based on the model that I'm using. The first is you get the signal, which could be anything, to the response volume, and that's response to the signal. And 3, we see an impact. So you want to see it give your signal. In this case, I use crossing over 0. You see a number go from negative to positive. Then you look for trapped orders in the New York Stock Exchange. This is the NYSE volume hitting. And then you look to see if that the institutions consume that volume and their consumption impacts the probabilities or the possibility space of the exchange. And so you want to see it be a big foot. So those 3 things are the important things that you track, and they're a concept more than a movement on an indicator. The idea is we signal people who chase that signal in order to generate the liquidity. And if the institutions eat up that liquidity, it impacts the broad market. Okay, so I want to make that clear before we move forward so that you can understand the model that I'm using, because all the times I take models and I bend them as much as I can, just based on conditions and stuff like that. And that's important to understand because you need to learn to develop your own opinion on your own, to make sure that you're not dependent on other people for things like analyses and opinion. You need your own. Okay, so let's take a look at where we were into the close yesterday. You remember right here into the close, looking at a nice bullish decay retest with stops below, and the market gave us kind of a wider 0 test. And I was looking at that thinking if these bulls come in, this would be the best spot for the bulls to pick this up and get that 0 test going again. And the idea was if the bears were going to come in and manipulate the market, that would look like cheating to me, looking like they were coming in. Well, not necessarily cheating, but I guess opportunists. They got into a position that wasn't quite working, ended up doing a little bit better than I think anticipated after it fell apart, and then pulling some strings to try and make that thing work. The bulls had an opportunity to use the bears yesterday to maintain their control over the market. Well, you can see that today the market opened lower, and overnight things moved quite a bit. It was a lot of up and down, and I think that has to do with the fact that there were bears trying to make things go down, and there were bulls saying, hey, do we want to let this go? The big event for today, okay, the big event. So if you're trying to scrub through this, maybe you'll see me shaking my hands and you'll stop. Okay, the big event is this. Right at the open, we had daily tension push under 0 right here. And then we saw some trapped orders come in, and that was a good spot for the bulls to come in and exert themselves and defend that daily tension. You can see that they showed up. They got daily tension back up away from 0, and that's been, I think, a really important event. They didn't step aside. The bulls defended daily tension. This is a big deal. They're not wanting to let go of the major trend. That's the statement and the action that they took. So this is in stone data point. We know the bulls, the major trend player bulls, don't want to let this go. So out of that movement, what happens? Well, decay moves positive, and it takes a little while, but we finally find orders right through here. And through that move, the bears fail to impact. So bears fail. Then we have velocity push positive right there, and we get bears. And the bears take a minute, but they hit. They push this down. They're successful. These bears failed, and then they said, okay, let's show up. Maybe it was just looking at the gap closure. I don't know. But you can also see right here, they successfully impacted tension. These bears came in, and I think in the face of the bulls right here, they mean business. I think that yesterday's decay retest with the structure that we had and the way that it looked, I think the bulls should have bought into yesterday's close. Structurally, they should have done that. This should not have opened lower. But we got the daily test, which the bears wanted that. The first thing was to get 30-minute under, then the daily under, and they got that. So I think right here, these guys mean business. They are here to play. So we know they're sitting there. So moving forward from here, this could get a little complicated. I don't think it's necessary to do that, but you could look at this as a wide short test, right? Here's our moves up. And you could also look at that and say there's stops right above, and you could view this as consumed liquidity from the bears as well. And I think that the story is essentially still the same, but there were bears right here into this, well, here or here, either way. And they came in, or sorry. I'm pushing through this too fast. We have a multi-day decay retest. There's the wide. It's wide, right? And then you have the next sample right there. There's the short. So the wide short scenario. It's a short amount of time after a wide test, a wide short. I know the word short's probably not a good, should be like a wide quick, but I don't know, wide short just rolls off my tongue. And you can see that after that one right there, there's their sample volume. And then we get some new lows right about there too, in this area. So there's a decay retest with stops above it. And when you stop out that, it's open interest theft. So we know that right through there, you can see there are bears here in these spots picking up that. And you can see right here that they did impact that. So we have two liquidity positions here. One's a little bit more complicated than the first, but the bears are here. And we're just going to say the bears are here. Or, let's just say here and essentially, right through here. So this is where the bears are sitting. They position in the market right there. The bulls have come in and said, absolutely not. And they bought into the lows. So we have bulls sitting right here. Major bulls, institutional bears. These I say major because they're the multi-day trend. These guys are looking for multi-day trends. These guys are looking for a push up 200 points. When you defend daily tension, your influence has to be big. So these are some big players facing off against some institutional players. The institutional players are doing a little front running, in my opinion, because if you're going to face to face with a big player, you're front running and sort of a little hopeful. Anyway, the problem that we run into is that the bulls right here fail to impact tension. Look at that. Sorry. It leans back. Boom, boom. We get these two samples and their volume is right there. And these guys don't hit and they don't impact tension. And the bears say, ha, you failed. We're going to take this. Well, let's see if the bears can get sampled after that failure, which I think is a big deal because of the whole fight that's been going on. It leans up here. We get a bearish sample right there, which is right in here. And look, tension, it's leaning up. They fail to hit it. Well, it pushes back down. We get a bullish sample here. Bulls are right there. Tension rises. Bulls hit. Bulls hit. Bears hit. Bears fail. So the bears are on the run a little bit. Velocity leans back positive, gives us another sample right here. The market pushes down and the bears hit again. Hopefully you're picking up. This looks like a quiet day. It is absolutely an all-out fist fight between these players. They are getting aggressive. When you're selling ahead of major trend players and you're trying to push things down big enough to impact the market, and then you see those big players almost step back and then come back in with a right hook to the face, and the bears come back in. Again, they're not laying down. We have players here. This is the bulls. This is the bulls. This is the bears. This is the bears. We'll just track this one, and we're gonna bunch these three in there. So this is their positioning. Let's take a look at the impact. Overall, look, tension has not moved down, meaning that the bears collectively, overall, their net impact hasn't gotten them advantage. They needed this to move down, so it's harder to cross back over. They're not actually gaining advantage. The bears are throwing punches. They're genuinely hitting, but it's like they're pulling their punches. We should have seen this keep going down. Or right here, when they hit this down, it should have kept going down. They're pulling their punches. Why? Why are you pulling your punches? What's the deal? What? Didn't the Bears effectively take out some bulls here? They found some cracks in their armor. This is terrifying, but then they came in and hit. They're hitting again here. What are you pulling your punches for? If they were actually injecting all that capital into the market and pushing, then tension would have gone down, and I would be sitting here going, these Bears really want this. The big problem, I think, the reason that they're pulling their punches, in my opinion, because I can't actually know, is because right here is a big fat player. That was a daily defense. They defended their daily probabilities. The day before, they had some problems right through here, and it kept pushing down into a decay retest, and that fell apart. Okay, so the intraday, the 30-minute bulls struggle. Okay, and that's definitely motivating for Bears. But the next thing, if you remember, first you take out 30, and then you take out the daily. But as soon as that daily pushed under, boy, those bulls said no in a very aggressive and structured way. This was a nice, clean, really structured, just fine bullish liquidity that they picked up here. Now, if you're saying, well, wait, did you just call that liquidity? Yeah, I did. And it's because it uses the same philosophy. It was this crossed over zero. So if you're watching probabilities and you saw probabilities cross negative, I assume there's some people who sell. And we saw trapped orders right here, and I'm treating it like liquidity. They were able to find some retail volume at the moment when they needed it, they wanted it. I'm treating this like bullish liquidity. So if this moves down, this position is going to need to liquidate. Okay, so we've got a fist fight between players. I think both players are positioned. I think both players are active. I think, while this doesn't quite look like it, it's sort of forming sort of a wedge here, where the wedge philosophy is that the more people come in and genuinely sell, things can't rise. And the more they come in and buy, the more they can't fall. And so you get sort of a wedge, and it's where that you have conflict. And this conflict is generated from opinion. Not from being trapped or anything. This is the opinions on both sides coming in. The bigger player is the bulls. They still have daily tension. And the Bears really haven't gained control of 30-minute in a super strong way. Just conditions change. This is not going to be hard to push back over zero in an hour. So I think the bulls have a little bit more of an edge in terms of their power to control the market, their size. But the Bears are putting up a fight. And if the bulls lose this, it's because of one thing. They got cocky. They didn't think they needed to do all the things they needed to do. It takes blood, sweat, and tears to build a trend. It's hard, it hurts, there's risk, it's painful, but you do have to play. And if the bulls on a 30-minute time frame just give up, they're going to put all the workload on the daily time frame, accounts. And that's a lot of work. You're supposed to distribute this among your teammates. And so I think that if the 30-minute bulls got too cocky, thinking we just do whatever, let me tell you what I mean by cocky. When I talk about institutions, if you're an institution, there's a default, which is you basically just win, but just by default. Your connections, your account size allow you to just basically win all the time. I mean, you're not sitting here going, oh my gosh, I'm going to lose money this month. So winning isn't the thing. Cocky for an institution means they say things like, I'm too bored of winning. It's like they get to this point where it's just too hard to show up and make the money. Oh, those Bears just don't even know what it's like to just roll out of bed and make the money. That's cocky for an institution, or that they don't think that they need to show up and play anymore, and they get too bored to make money. So you get things going on, and you're like, why? What the heck? And this is starting to look like that. The Bulls yesterday, I think, should not have been so on their hands about it. We had some teeth, and that's normal. Pressuring stops, okay. Today we got the daily test. These bulls need to wake up and say, whoa, they got us onto on a daily retest. We're in a range. It's looking somewhat coiled with the positions on both sides. This is getting heated. Bulls, if you don't show up and do your thing, it's going to go from heated to explosive and not in your favor. The thing is if the bulls do show up, we have another interesting feature here, which is that there's absolutely institutional liquidity to knock out right here. Absolutely. These bears are picking up and they're smelling that attitude. I think it's like an attitude. I think it's just attitude. They smell it. They know what's going on. The bulls, because we have a couple of positions. We've got these guys here, which I think that they would liquidate here. That position would probably be under, at that point, you'd be like, oh, I don't know if I want to hang on to this. Maybe I'll try to reposition. I'm going to set that as default. And then down here, we have, it's going to be lower than this. So let me rescale the chart. Probably down about there. So the bulls have some spots here. And if these bulls can't do something, which they impacted, we know there's bulls there. This has absolutely pressured the crap out of them. Horrible. If these bulls don't come in, what's going to end up happening is this is starting to look like trap the bulls, run them underwater, give them hope, and then optimize profits or get them to move their stop as far as you can in an attempt to get this to liquidate as close to the lows as possible. That's what this is starting to look like if these bulls don't do something. And it's problematic. We haven't seen stuff like this in a while. This is the bulls are acting like bears, what the bears have been doing for a long time. So we're getting another position right here. You see that? So it's crossed up. So the bears are getting themselves sampled. Here's their volume right there. And then take a look at tension. It's not much, but it's moving down. These bears, again, are here hitting. Bulls, what are you doing? So that's what's going on. The bears are getting encouraged. We've got them through here. We've got them here. This one failed. And now we're getting them here. Trouble afoot. So the bulls are running into issues here. That's what this looks like. The bulls are having problems. Their daily traders came in and defended, and that's a really strong symbol or sign or event or activity. What do you want? It's a thing to pay attention to. This matters. Is that Matt? Are you in the? I just got a picture. I think Matt is in the tub trading. It makes me laugh. I'm sorry. Hold on. Trying to be like dramatically stress the importance of today. But Matt is in the tub. Okay, Matt's in the tub. All the traders that are watching me are watching me from their bathtubs. Okay, anyway, back to this. So the bulls are about to get sampled again. These bears are encouraged. They're motivated. And their motivation, remember, because they have 30-minute down, it's not looking amazing, is to get daily tension under. They need this daily tension to get under zero. Then they can really say we have control of this. And it's going to take something explosive. Something that just causes the market to go, that's what it would take. Because I think unless that you really pressure this position in an aggressive way, and unless you get the probabilities shifting down in sort of an aggressive way, I don't think that daily tension is going to be moving under zero today. So that's what's going to take. These bulls, what they need is they have a bunch of bears in the market. They just need to chime in. That's really all they need to do. At this point, okay, so I want to make something clear, and this goes off in my head. When you have two sides to the market, you start thinking about this question, okay? And this is an important question for you to think about when you get in situations like this, where you're like, oh, both sides are playing, this is getting hot. And we've covered it before. How can we ruin everybody's day? Markets love this. How can we ruin everyone's day? So we're in this spot where we have this almost dichotomy. Moving up would maintain the bulls and tension probably come up. Moving down would motivate those bears, daily tension. So we've got this dichotomy, and dichotomies are just silly. Things are not binary. There's a lot of things that could happen. But when things get into these, it's really good for you to keep in mind that we can do this. We could do anything. So in this situation, I think that the market would be happiest to come down, just ruin these people's days, get them out of the market. We could even maintain this position here. We could pressure it, sure, and then come up and take out these people. Why can't we do that? Why can't we ruin everyone's life and be happy with that? Why not? So keep that in mind. How can we ruin everybody's day as a philosophy markets just love? They just love to ruin everyone's lives. And since today is a little slow, which you could look at options, you could use it range tools. But one way that I think is pretty easy is if tension is moving flat and sort of choppy, and this is the smoothed one, and it's near, it's down in the tens. This is just slow. This is what slow looks like. The internals aren't affecting possibility space, which at the end of it, if you think about what that means, it means that the impact of institutions, this is what you go, wait, so nothing? And you're like, yeah, it looks like the positioning is not all that aggressive across the board. But size, the size of the way you position has a lot to do with the structure that you're in. And I think this is a fight over structure, trying to demean the other side or take them out on a subconscious level or a deeper level before you start trying to pump things. And I think that's what we're looking at here. We're looking at the market saying, let's see what kind of trouble we can cause. Did those? It did. Oh, I forgot to do this. Let me move these really quick because Thinkorswim by default, it's default. I added like a bunch of charts. Here we go. So there's like, this is left over. Okay, sorry, moving my lines around onto a different drawing set. Okay, so that's where we're at. All right, now we can start to look forward. So we've established where positions are. We've established the trouble that's going on. We know a lot of things. Now let's take a look forward a little bit so we can get an idea of what's possible and what's likely coming. We're getting a bullish sample here. And we could see a bullish sample right here like that, right? Decay could come down and give us a further bullish sample. We could see this hang out and then come up and give us a bearish sample, a switchback kind of thing where you sample. We saw that here, sample. So we know what's in the near future. We are very close. The bulls could get sampled here. The bears could get sampled possibly. I think if it went right up now, I'd just consider that a bullish. But if it hung out a little bit and then crossed up, I would look at that as a bearish sample. So what could these traders do? Well, if we get this to move down and we liquidate these guys and we maintain that, this could also potentially be open interest theft. I wouldn't like it nearly as much. If we're moving down, wiping them out, I'm going to be looking at tension. And I think the objective would be to see if we can get tension to start moving down off of that. And that would be a bearish thing. So for the bears, that's what they'd want. For the bulls, getting this to move up, I really do want to see this curl. But I don't think that the bulls, if the bulls are going to take this, this is what I predict they're going to do. If the bulls decide to run this, that they would drive this up to here and tension would essentially just sit flat until these bears let go, and then it would go whoop, just aggressively curl up. Like they would hold back their impact really until right when the bears can't really, and then all of a sudden they just flood the stock market with orders, and we see, things can keep going. That's how I think the bulls would play this, like a drift up into their liquidity. The bears, on the other hand, don't tend to do stuff like that. The bears come in and say, hit this as hard as we can. So I think if the bears are going to move this down, if the bulls don't hit right here, I think that's going to add just more volume to this, more liquidity to that level, and we'll see the bears sort of start to move that down, and it'll start to lean down, and then it'll hit it, and we'll see a curl down, but they're immediately going to run into this problem here. So we've got this like limited downside concept with an upside that has potential for the bulls, but the bulls are going to need to come in here. If these bulls just sit back and say, it's too hard, oh, liquidity is just too hard. The issue isn't even the structure, it's the stinking mentality of the players. They're being garbage. That's a problem. You can't have, if you remember yesterday, we talked about this sometimes, the selling yourself to the institution. The institution's going to look at your side and go, you guys are doing really poorly. Your mentality sucks. The other players, on the other hand, are doing great. And they're going to want to put money into the side that does better. They have better structure. They're maybe more patient. They're more effective. So if the bulls came in here and drifted this up, I would pick up on that and go, oh, okay, I see what you're doing. And that could be a play. You know, you could say, well, the play here, institutions who I need your money to invest, was to trick these bears into letting us slowly move it up and take them out. I'd be like, okay, that's very cunning of you. And that could be an appealing feature. But if they just don't do anything again, then I'm going to be sitting here going, you guys failed here. You hit, but got pushed. I mean, your impact is struggling here when it comes to, you got knocked back. If you don't hit here, it's going to be like, come on, guys. Come on. So what are they going to do? Well, I think the best thing to do right now, if the bulls want to take this, is to drift this up. Not this, this. You know, if you can draw this on your chart, say a 45-degree angle-ish, that will be the best thing, nice and slow. And then we see tension sort of not really move up, and then just as we get to the liquidity, it starts to, so it look like that, and then it goes, whoop, and then it accelerates upward as we liquidate that position. I think that's the most sensible thing. I think the bears are stuck in a position. They're stuck. This is the bears being in a rock and a hard place. They've pretty aggressively positioned, I think. We have 3 positions here. They're motivated because yesterday they were able to take out some bulls and they got daily tension at least under 0. And they took out 30. So I think there's some like momentum there emotionally. But this is the hard place. That's some trouble. Those bulls showed up with full force. They kept daily tension over 0, no questions asked. So if the bears decide they want to move this down, we know how far it's going to go, which it's not going to be blowing out this position. I doubt it. And if it is, it's going to need to be aggressive. I don't think they're just going to take this out on sheer grit alone. You're not going to go, oh, flex my arm and push out a major daily trend institutional position. Flexing is just going to look like, oh, more orders, thank you. So I think a move down here is not in the best interest of the bears. But a move down here this low and then back up would make you hate your life. Because you'd be like, oh gosh, how blah, 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 how's this going to work? You know, we'll test out the low of this little large bar's tail. You know, markets like to do that, right? We could just ruin everyone's day and then move up. And at the end of the day, you could say, oh my gosh, it was bullish. It just ran stops. Or in other words, I was early. And that is the story you don't want to be telling. So my advice, what I think would be the smartest thing to do, is to keep them both in mind, because at this point, we don't know. As far as I'm concerned, both this and this are happening simultaneously. They are both playing out in my head. So what you're going to have to do is play this if you want to take advantage of this type of risk where you're not quite sure. You need to use tools or entry systems or money management or whatever you're going to do and act as though both are going to play out. And so you have clear expectations, a nice slow grind up here, versus a dip and run. Play it like both, or say, well, the dip would destroy the run, so I'll just play the dip. If it does dip and it comes up and we get things to happen right here and it looks like it's moving, then I'll play that and assume that that's what we're doing, or just ruin everybody's day. You could do either way. What's important is that you understand the two, I think, pretty clear realities the market has right here. I don't think it's that vague. I think that we have this gameplay is like fist fights in a back alley. They moved this out of the office. Is how I feel like. They're punching at each other. The bears are coming in. They're like, no, we can do this. Maybe something like that. They're fighting over the structure. And after the structure, we figure out who gets the structure. They're going to be done fighting over structure, and they're going to be dumping money into that, whoever wins. And so that's what's going on here. So keep that in mind. If you have tools that can take advantage of this kind of stuff, just look at the things that we have to play out. Their objectives, our objectives to do this. So if it starts to grind up, the goal is not to slowly grind up and then bounce off some pivot. The objective is to slowly grind up until we get to the point where these players here, these ones that filled in this area, go, oh my gosh, and before they know it, it's too late, and then we get to use when they unwind their position to shove it up. Pushing down, same thing. So pivotal moment right here. I think that's what's going. So here's our bulls are here. We could see that price is sort of just sitting flat. This is not spiked up yet. So 30.96, and then take a look, tension right here. So it's just moving flat. So we're just waiting. And I think there's a difference between consuming liquidity and starting to inject capital. When liquidity comes to you, you can accept those contracts and start to fill against them. And there's like a tipping point. At some point, the equity that you're injecting against those margined, because yours is full equity, theirs is like this little tiny piece of equity. So they have this much power and you have this much power. You meet together, at some point your equity overwhelms the market and you see the price go and pop up. And institutions don't like that. They don't like that because when you see price pop up, it exposes you. So they don't really like to, so they'll stop for it. It'll pop, and they'll usually stop for a second and oh, wait, okay, start filling back here. And that gives you an idea what's going on here. Okay, so it's leaning back, and I think this is going to mess with us. So we're sort of leaned back here in this spot. I'm going to do this just for this. We'll get a little bit wider here so you kind of get clear. So we're at 30.93. Now you have to remember that this institution, and this is what makes them sort of tough to trade with, is because all of us are sitting here going, well, where do I put my stop? Like, I don't have unlimited funds. And they're thinking more along the lines of, let's fill in this area, and as long as we're right, we'll just hold on. And they can tolerate more than you want to tolerate. So like moving down a little here doesn't end the position. You won't like it, but it doesn't like end it. You want to look for this curling down as it moves, and then you kind of got to get a little bit more through to somewhere where an institution's going to go, oh, okay, we're wrong, and then they move out. So I don't think that, a move down to where it got to there that's not going to eliminate that position. But you can tell that this is having problems. We're not seeing price pop up. It's moving sideways. It's moving. You want some food? I'm gonna grab this little boy some food. Just a second. All right, so we're moving down further. We're running into trouble. You see that? It's curling down. So these bulls have failed. We are getting that crap attitude that I was talking about. Not a fan of this attitude. We're moving, price is moving right to where those are going to be. And I think we're going to test out that. We're going to hit this here, and you can see tension curling down, and that tells you that this is moving to liquidate those positions. And if you're wondering which ones, it's this one and this one. The only other bullish position we have today is right here off the open from that daily test. This is moving down through the liquidity, forcing out those bulls, and they're paying this because they are giving us a crap attitude. They think that they can just miss and they can fail and they can let things just fall against them. They can give up this tension. It doesn't work like that. And this is something you sort of see like in markets. Like I see a terrible attitude by the bulls. We're getting this moving down and hitting these bulls. This is just, it's like, come on, guys. Pablo's telling me there is 1 billion to sell on the market on close, the MOC orders. Interesting. So this is moving down, and keep in mind our scenario here was, hey, we could totally take these people out, ruin their lives, and still maintain this longer term position. That's totally still possible. So let's keep an eye on that. The tension curled down, and to me, seeing tension curl like that on a move down, these guys dumped. These guys probably dumped as well. And that curl down, I don't think is so much the impact of like bears coming in as it is the bulls unwinding their positions across the board. Like they had to get out. It created demand because they needed to get out because it was moving the wrong way. And you see that curl down. Now the next objective here for the bears, so I'm going to get rid of that. So we're getting down through, we're testing out this here. The next objective for the bears is, what do we do with this? Can we get daily tension under 0? That's what the bears want. Can they pull it off? I don't know. I'm not sure that this looks, maybe, but I think we're going to get this move down. We just got under there, and now we're going to head back up. We're getting bullish, a bullish sample here, so we need to see some trapped orders show up, and we're waiting on those trapped orders to show up. The volume, the knee-jerk response volume to the move down. And this is looking like our scenario where we just ruin everybody's life. Let's just ruin everyone. And that's a philosophy you need to watch for when you have dual-sided markets and you're in an uncertain position. Think, how can we hurt everyone? And markets will just do that. And so I think this move down is exactly that. Our decay numbers getting under 0 here. You can see it ticked under there. This is the highest decay value for the day. And there's no numbers on it, just to kind of give you an idea where it's in the range. And you can see that it did tick under there. So now we need to see it move back up. We need trapped orders here. We get those trapped orders. The next thing, I'm going to be watching this going, well, since we just pushed these out, we could look at this and say, hey, is this open interest theft? Maybe these guys come in, they get hit right at the time you get bullish liquidity. It's sort of like, ooh, ouch. If you can't stab your enemies, stab your friends, right? Like, push out the people who are supporting the trade. So I'm going to wait. I'm waiting for that trapped order volume to come in. That's what I'm doing. I'm sitting here going, all right, if they can get that, then we can start saying, can we, these bulls here, bullish position, you know, they're definitely here. So I think pushing that out is going to be tough, because I think that these guys have made it clear we're not going to let go of possibility space. And at -2%, I think moving down, further moves down would start to give us another 0 test, which is what the bears want. But the bulls have already made it pretty clear they want to hold on to daily tension. We'll see. We're still waiting for those trapped orders. You see how, like, look at it, like, it's like, well, how far down do you got to go before people are willing to sell into the market? Come on, it's not that hard. Just do the wrong thing. That's basically what we're waiting for. Where are those orders? Where is that volume? In terms of the bears and what the bears could be wanting to do right now, I think they just got everything they wanted. They just liquidated those bulls. They just got the things they were looking for. Tension is still not moving aggressively. Like getting an advantage here for the bears, and like advantage meaning okay. Oh, fine. So getting an advantage here would be getting tension further and further and further away, such that it's harder for it to open up a little higher and then move back up. We're getting to the point where it's starting to look tougher and tougher, but they're not getting a whole lot of advantage. I mean, 18 is not super far away. You know, you got to see like 20 or 30 before it's, you know, even right here, we were down at 10. It could have shot up. This could still have moved, kept going within an hour or so. So you're sitting here going, well, did you guys really getting an advantage here? And they're not really getting a whole advantage, but they are taking steps in terms of structure. Knocking out active players is finding or opening holes in the armor of the bulls. They're saying, oh, you guys fell apart. And we started this yesterday. The decay retest fell apart at the open. Now we're seeing more of it. These guys just didn't show. These guys got taken out. These guys got taken out. It's trouble. We're seeing trouble showing up here. And it started yesterday in the afternoon. Well, really, I think it probably started here, where we had bullish positions here and here that I think were more of a statement. Hey, we're going to do this. But then if you look at tension, they didn't impact tension. So it was a statement, but in essence, they failed to impact the market. And this was the first time that we'd seen the bulls come in and hit liquidity, fail to impact tension. It wasn't elastic because the bears didn't come in really and do anything until later. So this is when it all began. That was the moment when it was like, oh my gosh, you guys just are making a statement. And I thought they were going to try and defend more than they did, and they did not. And it's just caused problems ever since. So if you're like, well, what are the bears motivated about? That's what it is. The bulls have been being kind of lame lately. So right here, if you're sitting here going, are you rooting for the bulls? Yeah, I am. I'm bullish. I think this moving up makes more sense here because we have these guys. They've made it clear up until yesterday and today, you know, they've got a lot of advantage here. They've got some great positions that are holding water, but we're seeing holes in that. Another thing that you can look at to kind of get an idea about this, and I'll just do this really quick because I know things are working. I'll keep my eye on that to see when the volume shows up. You can look at the DXY, the dollar index. Where did my mouse go? I lost it. There we go. And you see it's moving up, which means that value, which is wanting to put on or wear dollars. So they're creating this demand. So the reason you do that when you move your value is you want out of like a stock or something, and you convert your value into dollars. So your value puts on things like a glove. You can stick it here, here, and you can increase the value or decrease the value. And so seeing this move up tells me that there's money moving out of something. And then you come over to the ES and you say, well, there's all these bullish positions, right? But money moving out. And it starts to make you think, wait, are they taking profits? Yeah, that's exactly what that means, is that there's money coming out of the indexes instead of going into it. I want to see the dollar move down. I want to see people say, here's your dollar back, and that creates dollar supply because they take off the dollar glove, hand it to the market and say, I don't want this, and there's too many dollars, and so the price drops. And you take your value and you stick it into the stocks or something like that. And so we saw that going down. So people were wanting to go into something, and now they're wanting out of something, converting into cash. And so you look at that and you can say, oh, I see what's going on here. So that's how I'm interpreting that. And so when you see these events sort of work together, you're like, oh, the bulls are starting to have troubles. The dollar index is moving up. You say, oh, are they pulling out into cash? I'm like, yeah, it looks like that to me. And then they're getting this crap attitude with they have good liquidity and opportunity to make money, and then they do nothing about it. And you sort of are like, oh, you guys frustrate me. And then the bears are coming in and they're starting to fill. They're starting to get positions. They're starting to inch the market further and further towards their control of the index. And you could sort of see all these things playing out. And I think it's really interesting to watch. So did you see that? It popped up, but there were no trapped orders. So where the heck is the volume? Like you have all the stocks in the index, and then you have the index. You're supposed to see a bunch of traders, just a bunch of traders, a bunch of them, doing a bunch of stuff that gets consolidated down into the index for volume, and then we take that and we offer it, and the institutions trade against all that on the indexes and the futures and stuff. And it's just the thing is that traders don't realize that after they execute an order, a lot of the times their money is already gone. It's already claimed. It was an institution said, I'll take all the volume. You bought in, or you sold these days into Apple, and you thought, oh, this is a good sell, it's going to come down. But that institution said, I want that. And I want that here, and I'm going to put in this much, and they put in this much, meaning price is going to move to the difference. It's going to move in the favor of the institution, meaning your money is already claimed. Your account balance was already claimed by an institution as you filled an order because you neglected that they were trading your account on the index. If you think that institutions can't move from stocks to indexes to futures to options and back down to futures and back to indexes and back down to stocks instantaneously, you're crazy. They can flip between them. And that's what makes them better than you, is they have size, they have tools, they can move around in ways that you can't move around. They can take a bunch of stocks and say, ooh, these are ugly, but they're equivalent to an SPY, and get rid of those stocks, take an SPY, and then they could go up and then back down to a different set of stocks if they don't like that. And you're going, wait, what? You're like, it's interchangeable. Have you ever signed up for something like a loan or whatever, and they ask you, are you holding any index ETFs or equivalent? There's a reason they tack equivalent on there, because institutionally, holding the ETF is exactly the same as an equivalent a lot of the time. So there's no difference. Like, I'm sure an index or a fund would have no problem saying buying up positions without and making money, profits and losses just like the SPY without ever touching the SPY. The rest of us have a difficult time doing that. We're like, but I have to interact with the SPY in order for the SPY to interact with me. And that's a problem we suffer from. So, yeah, well, let's take a, so, let's see, John just pointed out the VIX, so we can take a look at the VIX really quick here too. I'm looking at the VIX at a longer term time frame. I know a lot of people love to do the intraday. It's like pushing a new high, pushing a new low, and that's okay. But the scope I use is I use this patterning. It looks for patterns. So what's important about this tool for anyone who's trying to figure out what the heck it is it's not a moving average. The objective of this tool is to let you look at this and instantly know essentially what those prices are doing. And that's it. It's not to tell you where a moving average is. So this getting recalculated or sort of moving around is because it's trying to say, when you look at this, this is the current state of this thing. And so when you look at this, you could say, oh, you should go, that looks like it's strongly down. Yes, you interpreted that correctly. Oh, we're inside the first set of, so it's strongly down, but it's mostly back up. Yes, you interpreted that correctly. If you're all the way down on the outside of the widest set of bands here, oh, that's far away. Yes, and the goal is not to give you a data point that you can trade. It's so that while you're trading something else, you can look at other markets that you do not analyze and know what they're doing. I can look at the dollar. I can look at interest rates. I can look at gold. Here's the ES. VIX. oil, soy. I don't really need to do all the fancy analysis. I just look at it and say, oh, so soy's been kind of rising lately. Yeah. I can look at oil and say, oh, it's sort of flat, but it's been up and it's sort of flattening out. Yes. So I can accurately determine what all these are doing without getting out a bunch of tools. That was the goal. It's not to create like a moving average to buy off of or something like that. That's not the objective. And it's using pattern math. So it's looking for patterns, things like a shape or something, anyway, so that's what it's doing. So when we look at the VIX, you could see that the VIX, though it looks aggressive, is actually pretty neutral. It is not up. This is pretty dead in terms of this. Now, if you're waiting for the VIX to come back to, I don't know, 10 or something, just give up on your dreams. When they introduces the micros, the micro futures, they also introduced higher volatility. We knew that when that came out, that when you allow people, so if you get in here and it moves down 10 points and you have one contract, that's $500, right? Well, now you could get in here and it moves down 10 points and it's $50. So what does that mean? It means that if the market wants to take your $500, it has to go 10 times farther. That means the VIX is now artificially inflated almost 10 times higher than it was before. The VIX will never be the same because of future micro contracts. This isn't the first time we've done that. Where do you think the E-mini came from? Volatility shot up. All of a sudden, people could tolerate things and prices move more. But in reality, they're not moving more. It's that everybody's trading micros now. You're like, oh my gosh, this range is 380 up to, well, that's 100 points. Well, if you're trading micros, it's 10 points. Because in terms of dollars, people are doing the same thing they were doing before. We don't have a new high volatility market. The pandemic didn't cause a massive spill. The pandemic was assisted by artificially inflated increased volatility because they introduced a massive new securities just before that. And it caused volatility pressure to be through the roof because all of a sudden your trading account was only losing $50 when it should have been losing $500. So it could go 10 times further. So I argue that the pandemic's massive push down was 10 times bigger than it ever should have been. Maybe not exactly, more like 50 times bigger than it should have been. Yeah, 50% bigger. 50% bigger than it should have been. Let's see, 10 for, I'm just going to say 50. It's just way too far. It was way out of blown. And it's because of micros. The micro future market let traders continue to participate all the way down when you should have had your margin call way earlier. But you didn't because you all trade micros now. Nobody trades futures anymore. They're all micro traders. I'm going to take a small position. There's no such thing as a small position. There's a position. No small position. And if you're taking a small position, you should be not trading because you're saying, I don't believe this trade is going to work. Stop taking small positions. Stop it. Just knock it off. So I think that when you look at that and you put that in mentality and you think, oh, so this is actually flat. Yes, it's flat because the micro market shifted all the numbers and they look like they've shifted, but they didn't. You're still losing the same amount of money you were losing before the pandemic. So is everybody else. You're still making the same amount of money you were making before the pandemic. So is everybody else. Because everybody moved to micros. I haven't, but everybody else has moved to micros. Everybody I know is talking about micros now. I'm like, micros. And it's letting the market do things like sweep 10 points, which is really just a 1-point sweep because you're holding a micro. So when you look at volatility and you think about it sort of that way, this looks like volatility is actually pretty neutral. It was able to push up and it didn't get very far. It didn't expand very much to the upside and it's already back to pretty neutral. Still up. It's still up. It is. But I mean, this is not a lot going on here in terms of volatility. So if you think of it that way and you readjust your vision there and you go, oh my gosh, these ranges are huge. They're pretty much the same as they were before. and we're all just getting confused. So yeah, that's my take on the volatility and what I think's going on the VIX. And the whole point of that indicator, the stat, oh, you guys are looking at that. You don't want to look at that. You want to look at charts. You're all addicted to charts. It's just so you can quickly look at it and see what's happening. So you don't have to spend time being like, where's the things? What's it doing? Yeah. Okay, so that is where I think those things are. Yeah. All right, so we still have not found, you see this? We pushed on it. We still have not found any retail sellers. Where the heck are they? Where's my volume? Gosh dang it, where are they? What's this? What's this? Where are they? There's none. There's nothing here. We're seeing, we had some new lows come in. We're getting a couple new highs. Now the market's leading back up and looking to sample the bears. Maybe we get a bearish sample here or here. What the heck? Where's all the volume? Where is it? Where are my sellers? And at some point, the time between, which is where it starts, you say that the time at the end minus the time at the start, at some point, this distance gets too big, 30 minutes? I mean, come on, like this stuff works. You get it to cross over and there's your volume. You get it to pop up and it takes a couple, this one took a little longer. You get it to cross over, there's your volume. We're gonna get to the point where we're sampling the bears and the bulls just had no volume. And so you can't say, oh, the bulls didn't show up, because they couldn't. They were blocked. What the heck? What the heck? Where's our volume? Where are all the people who respond to things like, oh, the energy's going down, let's sell everything? Where are those people? We're about to, there we go. Look, we're moving up. We got it right there. Boom. This is moving positive. Now we're looking for trapped orders, and we have a pretty decent chunk. I'd like to see this 29% at some point, maybe if it went to 20 and then 10%, and then I want to see it go back up to 20. I'd like to see it pulse. So we're seeing this like trailing off volume. I want to see it pulse again. And that pulse right there would be the one that I'm looking for, because I want the signal first, then a pulse in volume, and then you can say, okay, that's sampling the bears. That's something that's a little difficult to track historically in the tail end charts. So I've tried to come up with algorithms to it's a very difficult thing to track effectively. So watching it while it's developing is the easiest way to do it. So so we're getting 23, so it's moving down right now. And I'd like to see it pop up. 20, just having that tail off is not what I want to see. A pulse as a response to the signal. There we go, 46. There we go. So there's our pulse of volume that's coming in response to positive momentum or positive energy in the momentum. And then now we can say, okay, this is now collecting the volume, right? So this is the gathering. They're gathering all these people up. Then they're going to hand them over to the institutions and say, do you want to trade against these people? And that's what we're looking at. So as soon as they hand that over to those people, then we'll say that that's finished. And then we can start observing here and say, are these bears coming in? The bulls didn't get sampled. It moved under and we didn't find it. This is an interesting situation because we know that these guys, or we can see that they got liquidated. It pushed down, tension curled down. We had everything. They got pushed out, but no liquidity. This is intense. Like this is one of those situations where you're like, what? What's going on here? Okay, so we're all done. We saw the signal. We got the orders. We saw it pulse up. We have bears. This is now sampling the institutions. Here you go. And now we get to see if they're going to play or not. Now we're going to watch the bears. Let's see what they're going to do. Keep your eye on tension. You see how that's sort of moving up here? It's like, don't move up. We didn't find them. What the heck? There were no bulls down there. There were no bulls. We didn't find a bullish position. So let's see what these bears do. The bears are getting handed a position. They just liquidated these guys. They have a position here. Position, let's see, did we get? We did. We got here. We got a position here. I'm just going to track it from here. And we had, all the way to here, I guess. But so they've got a bunch of spots in here. Almost too many spots in here. All right, you see that? Tension's moving down. We're getting it. It's working on it. It's seeing if we can get that to happen. Here comes some more trapped orders, which looks pretty good. We're getting some more, and I'm going to associate those with this this here and just say, okay, there we go.
Where's Papa?
Go look through the window, see if his van is here. And then we'll see if these bears, what they're going to do. I mean, at this point, basically, if you're going to inject money here as a bear, your focus has got to be liquidating these guys. There's no just getting in. It's going to go, at best, that's what's going to happen to you. At best, you're going to get crushed. So their scope right now is pretty limited in terms of how far this position could run. But they've got a bunch of positions and maybe they're feeling gutsy. I don't know. Also, where the heck are the bulls? We saw them get liquidated, and absolutely, I'm saying open interest theft looks good right here for these guys, but usually during open interest theft, you at least get the volume to show up. Miguel, you're talking about, Miguel just said, why didn't the sellers show up? And Miguel, you mean decay moved under zero and there's no sellers here, right? And that's what we're talking about. I don't know. I actually think it's nuts. I don't know why the sellers didn't show up. They should have. We should have had volume there. I think in this condition, it's like we've had some aggressive moves, and it's almost, you'd almost think on some higher, more superficial level, people would say, oh, it's continuation. That's some sort of confirmation, right? I think this is really odd. This is really odd. This is suspiciously odd. Why the heck didn't we get that? Now, it could be that the volume did show up and it just was not administered to the market. It was fed into, I don't know, dark pools? We won't know until tomorrow when dark pools start issuing their orders and stuff. So we won't really know. So I don't know. Here we go. We're finally getting some sellers that are showing up. Oh, now you sell. So these guys are just so smart. They wait until it rises to try and fill. Oh, it disappears. So there's just a couple there. Just a couple. Not enough to even finish the bar out. Honestly, I want another sample. Like a signal here, getting volume this late. That's too far. I want to see another sample. I'd like to see maybe decay moves under here or something. Okay, look at this. Look at their impact. So these bears right here, they're getting this volume again, and their tension's not really. This is something that gives a couple minutes, and that's why you got to have an expectation before you try and participate with an institutional sampling, because there's a little bit of time you have to give it. We got to give it a minute here, but I'm not seeing that impact. We had a little, it was like trying to move down a little bit, and we're not seeing that anymore. Okay, so John was just pointing out in the YouTube chat, he was saying that it seems to him that the Bears had that ability to take out the Bulls. You know, the Bulls handed the gun to the Bears, and the way you win is they can't take you out even when they have complete control. And he's saying that he thinks that that the Bears couldn't really pull it off, but the Bulls are still failing. And I think, yeah, I agree. This is really confusing because we're trying to read into their intents. Like, I don't necessarily care what they're doing or what they've done, because it's done. I'm more interested in what they intend to do, because getting ahead of an institution and saying, I see what you're going to do, gives me a leg up, an edge. It tells me, I know you're going to buy that or sell it. I know you're going to. And then if they do, I can also say things like, I know you did, and so I know you're going to liquidate if we push that underwater. So knowing where you are isn't as important. It's not that I know you're there, it's that I know what will break you. It's that vulnerability thing that makes us basically sentient beings. We know how to hurt one another because we know how to hurt ourselves, which means we know how that you would hurt us. It's about knowing how to hurt each other. And so it's not necessarily that I care that there's bulls here. It's that I know that a move down here would liquidate them and we'd see that pump tension. I'm more interested in that. So we got a little bit of volume here for this, and it was like intra-bar. And if you really stretch, you could associate these two. I don't like doing that, but this is going to get interesting because we're getting some mixed messages here. We're getting difficulties. The bears it looks like they're trying to move this down a little bit, but we're not seeing that nice clear, okay, here it is. This continues to rise, decay continues to rise. We're about to get another bearish sample, so we'll have a bearish sample backed by another bearish sample. And it's going to start looking like this. And what'll make this situation so incredibly difficult is that this is the spot, and that was the only spot. And there's nothing else to be done. Everything else got taken out. And the only people who won would be these people. So if we don't get another bullish sample through here, that's just tough luck, because so I'm okay with it. We don't need another bullish sample. We have the main major position right there. I don't need one. I would love one because it would give a little bit clearer opportunity to execute a trade. But also remember, this is following one of our plans. It was either a grind up that popped, or we shoot down and then move up. And we're getting the second scenario. It is doing exactly the thing that we thought it was going to do in the most irritating way possible, which is markets being markets. We didn't get our liquidity. I'm going to guess that tomorrow we're going to see a bunch of orders show up at 310.50 or so on the alternative filling next to the ADFN dark pools. We're going to see that tomorrow, but you won't know it until tomorrow near the close, and price will be way up here, and you'll say, oh, and by the time that they get out, you can't trade with them. I think that's what's going to happen. Where the heck was all that volume? Where did it go? Where did it go? You guys, if you've been tuning into this, you know that that just doesn't happen. You don't get to a point where you liquidate somebody, strong push, sample, and no volume shows up. Come on. Freaking come on. There we go. Ouch. Ouch. Ouch, bears, right? The bears are going, ouch, there's our sample. This is tough stuff. The only way you could take advantage of this is the structure. There was no you just had to say, well, if they're there, I'm going to hop in. And that's what you had to do. Or you could have said, well, we were looking for this type of thing and tried to take advantage of it. This was rough. They ate up the volume, and it's hidden somewhere. I think it was hidden somewhere. We had a little bit show up there, right there. So if you want to stretch and say, this signal generated that tiny itty bitty pop of volume, I'd say that it's not like it's giving us another choice. That's all we have, is that one little spot where we had some volume for a moment and it was instantly gone. It's almost like somebody really wanted to consume all the volume so much so that it never actually got reported. You market. Okay, so we're getting this to cross over again. So I think this position has effectively failed. Their tension is not, it was trying to move down there. It really was trying. I think that they did, and sorry, nope. Now they're getting another sample here. So we're going to again look for trapped orders again. Let's see if they can do something with this. Maybe if we're lucky, we'll get a little bit more structure and this could move back down. We get a bullish sample or something happier, more fun to take advantage of than, what the heck, where's my volume? Gosh, I hate that. That's tough. That is tough. The only way to know what was going on was the structure here. Okay, so here's our trapped order. See? The bears can pull it off. The bears get their volume. Why don't the bulls get their volume? Yeah, that's exactly right. Well, Miguel, you say if that volume doesn't show up in the dark pools tomorrow, then it's a total mystery. I would say probably bucket orders, but they still have to report. So if it doesn't show up, then we're wrong about that. There just wasn't volume. Nobody wanted to sell it, which I think is suspicious as crap. There's no way. You're telling me that there's not some fool out there who saw this? Like, it's a continuation pattern. That, really? Really? You telling me that nobody wanted that? Bull crap. That is bull crap. Somebody wanted it. I think it's going to show up in the dark pools. We'll watch for it. We'll keep your eye out for the alternative, whatever, I forget what ADFN stands for. So, yeah. This doesn't happen often, Miguel. So he was asking, how often do we see this kind of thing? And the thing that I'm keying into is we have structure. We saw liquidation. It was a really good spot. It swept down. We got a signal. Everything lined up. This was a good spot for sellers to try and turn off their brains. And we didn't see anything. And I think it's incredibly suspicious. So this doesn't happen very often at all, like ever. Occasionally we see this where I'm frustrated. I remember once before being annoyed, being like, where's my volume? Where the heck is it? But I remember that time I ended up getting it. But in this instance, structurally, I think we're going to get this in a slow move until it suddenly capitulates. And so how do you cope with this whole thing? Well, it just is what it is. You have markets that do things, in my opinion, that are just unfair, like suppressing the volume so that we don't get to see it. If that happened, I don't know what to do. I don't have the clout to like participate in those markets. They don't let me in, or the money. I suppose they probably could pay for it, but nothing can be done. I don't know what to do. There's just nothing you can do. So I think this was entirely unfair. I really do think this is nuts. I think there absolutely should have been volume there, and it really bugs me that. So there was a little bit here, so we're just gonna have to say that's where it was because we did detect some right there, and that's the best we got. It showed up for a bar and then vanished, and the market's grinding higher, and that's all we got. That's all we got, so we got to use what we got. All right, so the objective here again was to liquidate these positions, and they're getting what they deserve because these bulls have been pathetic. So tisk bulls, they get liquidated, and now it's grinding up, and this is the position that supported the whole thing. So we're getting a grind up. Now keep your eye on tension. When tension curls up, that's when these guys are dumping. I think that this is not today. This whole thing started right here. The market gapped up, and we had, I'll zoom this out too so you guys can see. We had the bears try to sell, and the bulls buy, and the bulls impacted the market, but they just didn't hit. It was like they were filling market wide, but they weren't hitting prices. And then the bears came in, and it all started when the bears tried to eagerly jump in too early, and it messed up the bullish whatever. And then everything changed from there. It was just like boom. And so this trade here, this whole thing matters. I don't think it's smart to try and separate them out. I've sort of been zoomed in because it's been a really slow day. And so things can sort of get difficult to see. So I think this is all one thing, not 3 different days. This is all one big event happening. And it started when the Bears came in and the Bulls couldn't muster a strong fit. And the Bears said, boom, and they did some damage. So I think that's what's going on here. So I think that if this continues to grind up, which I still would just love, oh, here we go. So we're getting, this is leaning back, that the Bulls, which I think are here, are not just looking at today, they're looking at all of this. And I think these jerks right here really, really just need to get hit in the face. So that's what I'm looking at. Like in my head, I'm considering all of this, trying to look back. You know, we have the Bulls again weekly coming in, and this, interestingly, that this is like, this was the same thing that happened here. Bears came in too early. The Bulls hit but didn't impact tension. The Bulls impacted tension but didn't hit price, so it was a little different. And then the Bears devastated them. It was the same thing twice. And today we're getting the Bulls came in, impacted everything. And this is now a new story for this whole thing. Like, we had the same event happen twice. Now we're getting a different event that's going on. And I think that the Bulls are going to want to take these out. That's what I would want to do. That's what I want to do. I want to see them just get crushed for this nonsense that's been going on in the market that is irritating, to say the least. So, okay, so we're getting a lean back. Can we get a bullish sample? Can we get something? Here we go. Now we're looking for that volume. Where's our volume? Tell me we see it this time. We only got 15 minutes left in the market. Yeah, Jim's saying the players who get caught on the wrong side of this are going to be screwed. And I agree. We have, and it's because we have bulls who are holding on to swing positions, pressuring from below, just sort of generally. And that's the teeth idea. They're letting things jab and poke, but they're generally holding. And the Bears coming in very motivated. So if these bulls fall apart and they can't make things happen here, institutions are going to go, screw you guys. We're getting on the Bears side. We're recovering. We're going to sell. But if these bulls come in and they're just like, all right, we got a position, we got things happening, we liquidated, ruined everyone's day, let's move this on forward, then that's going to look good too. But as far as I can tell, this is the big deal. This is the big hitter. This is the guy right here. They're here, they're active. We have data points that say this is here. It's not something we're imagining. It's not in the future. It is here. This is the thing that's going to matter. All right, so we're getting our trapped orders. We're getting our orders. These people are seeing the velocity move negative. They're getting excited. Their algorithms are excited. They're selling the stocks. They're selling. So we're going to get those trapped orders right in here. We have 15 minutes till the close. 15 minutes left, so just a little bit of space here. And well, maybe we could get decay right under at the close or something like that, and we'll get a sample at the close the market, it opens and goes like that, and then just never comes back. I would just love that, but we'll see. This is tough, and I'll tell you, like, I'm annoyed, right? Like, I'm emotionally annoyed about this whole thing. This bugs me because it makes it so clear that there are people who can do things that they should not be allowed to do and that I can do nothing about it. And it annoys me. It is annoying. It's not fair. Anyway, so that's where we're at. We're getting our bullish sample in the close. I think the Bears messed this up. They're finally impacting. So this one right here, the Bears have hit off this volume, and you can see that price slid down. You can see tension is down. We have Bears are here, bulls are here. I'm going to call this implied bears or bulls, sorry. But this is the dark pool problem. I don't know until tomorrow. Almost. Okay. So it's implied. They're implied. We don't get to know until tomorrow. Drives me nuts. Almost. Almost done. Okay, so we're just waiting for this to finish up. Our last couple minutes here. Decay's real close. Tension is basically where it was at the open, so almost a net nothing in terms of this. And if you think about this, today was almost the Bears' day to shine. The Bears had everything. They liquidated bulls. They did all the stuff. They did all the things, and then they did nothing. It M says all the action always happens on Friday. Then you have to hold over the weekend, which sucks. I really hope not. I want to see a really good setup that doesn't ask me to hold over the weekend. I'm not a big weekend fan person. Not because I couldn't or whatever. I don't like it. I want to have a life on the weekends. So I really hope not. That would be annoying. But this market is being annoying. I really think that that's what's going on. It is doing annoying things. So Phil is asking, what is the 48? What is this number? What is this number? So the reason it's a percentage versus like a number, some unit, is because that we're doing. So when you do analysis, there's a few things you can do. You could run a moving average, right, that follows price, or you can take a preconceived idea and attempt to correlate it. You know, you take data points and you say, how well do these points fit this preconceived notion? And you take them in chunks. So you say, this chunk, how well does this chunk fit that idea, this idea? And then you can get sort of it has like a fitness. It's how well it fits that. And you get a percentage in terms of 1 is a perfect fit and 0 is none. And then what I've done here is to say essentially that, but then I put a threshold in here that's like, well, at about 50%, you know, if it's like, I'm like, that doesn't really fit. And so at some tolerance, you say it no longer fits my preconceived idea. So what I've done with the volume is I've taken volume and I've modeled out the data set, and I'm looking for patterns that it needs to fit. So it's a percentage because it's fitting a certain pattern, and then at some point it no longer fits that pattern, and so you'll sort of watch volume drop as it no longer fits the pattern and moves away from it. And so it's a fitness algorithm that shows you a pattern. It's pattern analysis versus what we're used to, which tends to be like, you know, it metabolizes a data point on like a line and then gives you a new average or something. And so it's a little bit different type of analysis, but it allows me to accomplish something that otherwise would be impossible. So that it's 48%, meaning it's 48% fitting that. And so you tend to see that as buyers come into the market or sellers come into the market, that when they're strongly in the market, they fit the pattern well. And then as they're no longer filling, the pattern drifts away. And so that's how it's working. So it's not a volume. It's not like 65 contracts or 65,000. It's saying that the volume itself is fitting something I'm looking for. Okay, so we got that volume to finish, then we got decay to move under, and now we're getting the second set of sell coming in, and they're at 5%. So they're there. I consider as long as it shows up, it meets that thing. So with respect to that, occasionally you'll see it flip on and off on the current bar. And that's because it's trying to fit that pattern. And as it moves around, it'll readjust to fit that pattern. It's trying to see something. And so you have to have a scope that's beyond every 1 minute bar. You can't say that an event on a 1 minute bar will make or break your strategy and the things you're willing to do. If you are that brittle, be careful. You can't have an event that happens on a 1 minute bar change your opinion or what you're going to do or what's going on. You need a strategy that is resilient, at least a couple minutes of data points. If it's 1 minute bar changes you, your understanding is too thin or non-existent. And so I tolerate it, those types of things, because I don't take action on something that happens on a 1 minute bar. My philosophies are trying to run multi-day. So if I'm going to buy into a low, it's not because I saw trapped orders here. It's because of all the context from all this context, and I think something's going to happen, and I know exactly how it should look, and so I can tolerate a few minutes of data points one way or the other. That's okay with me because I'm trying to get a scope that's wider than a couple minutes. But observing the 1 minute charts, because the resolution's a little higher, and I like to watch the drama, and I like to watch the crap and the things, So hopefully that answers like what that is and how that indicator sort of works. Okay, so those bulls came in twice, and look at this. It's trying to move down. What is it? What is this? What is this? Bulls, you horrible, horrible people. I think this is getting into the close shenanigans that go on all the time. Fitness to the form that okay, so I was speaking generally. I wasn't telling you exactly the form, but to help you understand what the percentage means. And so what you're seeing is it's fitting the form that I invented. I invented a form. I made it up. It's all made up. The whole thing's made up anyway. So I made it up. So that's the form. It's something that I made up that I thought would matter, and that's what we're tracking. So it's not something that I would say like, oh, to this or that you'd be familiar with. And yes, I'm being a little secretive. It's my own little invention. If you really want to know, you go buy the indicator. Not that you have to. I'm not saying you have to, or you go buy it and you have you go look at it and figure it out. I encourage that. If you own some of my little works of art that we work with here, and you went and you like the stuff and it works for you and you wanted to get them, I encourage you to flip through them. Ask me questions. I mean, if you went and purchased it from me, I am more than willing to have an open conversation with you about what the indicator is doing. That's no problem. So I think it's good for you to understand how the tools work. It's a lot more complicated than you probably want to deal with. Nothing that I do is simple. Now, most of these are 1,000 or more lines of code. So there's no short answer. A lot of people are like, well, are you taking an EMA and comparing it to an SMA? No. They're extremely complicated state programs. These are more like programs than an indicator. An indicator tends to be you take one EMA, compare it to another, or you take the fractal value, which is, anyway, I don't want to get too technical. They tend to be more like programs. They're very highly conditionalized. They look at a lot of stuff. And I think it's good for you to understand how they work and why they do what they do. I think that's really important. I think too many people put an EMA on there and don't know what an exponential moving average is. They don't even know if the indicator has memory or not. Most people have no idea. Does this moving average have memory? What does the exponential in EMA even mean? And if you don't understand those things, you really shouldn't use them, in my opinion. I know a lot of people disagree with their actions, not with their words. So it's fine. Do what you want. So John asked, out of all of your indicators, which would you recommend first? I would recommend you log into the Zoom and use them all first. I personally think that tension is probably the one that most people like, but I think it's also one that most people misinterpret. Uh, this is not a TTM squeeze indicator. This is not a MACD. It's not a it's not an oscillator. I mean, it is an oscillator in that it functions as an oscillator, but it's typically misunderstood. This is the possibility space of momentum derived from the advanced decline indexes. So you have to interpret it that way. And so I think that this is probably the one that most people are most interested in. I think that the velocity and decay combination with trapped orders is, I like these, but I would not, if I had to, these are the ones that if I had to get rid of everything, I'd say I'd want the ADI, which has velocity. It's this one. I'd want decay, which is this one. I'd want trapped orders. You can't see the label. And I would want tension. Those are the ones that I would get, because those are the root core ones that tell you where the positions are and what's happening, and allow you to say things like, I see what is coming. The other ones, like, the cumulative advanced decline, a lot of times I don't even point out the analysis. And that has to do with, I don't want to muddy up the analysis for anybody watching. I look at all the things on this screen, all of them, all the time. But I talk about the ones that I think are going to fundamentally impact and benefit you the most. And so these are the four that I think are most important. Generally, if you wanted a tool, I think trapped orders, in my opinion, is the coolest one. Having developed them, I think trapped orders is awesome. You can add it to any indicator you have and use it to track volume. So if you have an RSI, for instance, it's just RSI is just my favorite one to pick on. It's not a bad tool, and it gives you some sort of buy signal here. It moves outside of its lower 20. And then you check out the trapped orders. You can line those two up, and trapped order is one of my favorites, but it doesn't, if you want to grasp this type of analysis, there's four indicators I think that would probably be the best to pick up. But trapped orders, I think, could independently benefit any trading strategy. It looks messy a lot of times. What ends up happening, which is cool, is that trapped orders, the volume ends up showing up exactly when you need it. And then it's just noise otherwise. And so you'll put lots of tools with it, and you'll go, oh my gosh, like it just keeps lining up, happens to line up. And it's one of my favorites. But then these are like my children. Like, I developed them for years. And so I have a really biased and crazy view of them, because I remember fighting with them and developing them and learning and doing the math and all the nonsense that goes with working with a limited platform like Thinkorswim. So that's just my personal opinion. I think trapped orders is by far one of the coolest indicators. I think portfolio orders is also one of the most creative things I've ever done. I think portfolio orders is nifty. So yeah, I could ramble on and sound like an old man having old memories of past events, talking about developing these, because they took years and years and years, and I still continue to try and develop them to make them more resilient to things like data loss and problems, or being able to plot them on any type of chart, 24-hour, you want to put it on a daily chart. What happens if you make mistakes? Is try to be just all plug and play. And anyway. So thank you. Ella said she thinks it's the most powerful method, and I really like it. My goal was to you want resilience. And resilience in the end means that a move against you, if you're long right here and it moves against you, can you survive that? Does your analysis justify it? Or do you have to shut your brain off to cope with anything that disagrees with you? Do you? For me, resilience means I understand well enough that counter trend signals, even if I'm in a position that goes the other way, don't shake me, because I understand what they are and how they work and what's going on. I wanted a system that if I got stopped out, I knew exactly why. I knew who it was, where they came from, what their objectives were, and I understood the risk. too many systems ask you to do things like get into a trade, and if you get stopped out, that's just a statistic. Forget you and your statistics. I want to know why I got stopped out. If you haven't sat at your computer and said to yourself, oh my gosh, I had $2,000 more this morning than I do now, and then you had this pitting in your stomach that made you say this, I don't know what I'm doing. I have no idea why I just got stopped out. I just lost a good chunk of money and I don't even know why. If that hasn't happened to you, either you're just ignorant and you just don't care, you're neglecting the world around you, or you haven't been trading long enough. Because there will come a day when you are face to face with the fact that you have no idea what you're doing, and nobody does. And it should bug you. It should drive you nuts, like a thorn in your sock that you picked up somewhere, it keeps stabbing you. It should drive you up the wall. This system is designed to resolve the fundamental issue of ignorance. Fact that nobody knows what we're doing. Nobody has any idea what's going on. You need to say, I know why I got stopped out, who they were, what they were after, how that's going to impact the market, what to do next, what's coming, where are we going, what are these people doing, who's here, who's not. All these questions so that you can have a clear understanding, and then go do your trade things. So that if you decided that this was looking good and you got in here and you're making money right now, you should know exactly what's going on. You should know exactly where this is going. When you see the market move against you, you should know exactly what the risk is of these bears. Because because you know what they want. You know where they're going. I hate making and losing money and having no idea. Oh, thank you. Okay, give me a minute, okay? So this whole system is designed not to tell you when to buy and sell. It's to tell you what's going on so that when you do, you know what's happening. Because I think it's fundamentally, it's difficult to do. First of all, it's hard to keep up. And second, it solves that problem, that empty, gut-wrenching feeling. It also solves another problem that a lot of people aren't aware of. If you buy into a low and you make, let's say you make $1,000 and you don't know, you have something called a knowledge gap. When you don't know something, your brain takes emotion to fill in the gaps. So if you made $1,000 for an unknown reason, your brain will help you know why, because you're a winner. And you will lose that 1,000 plus another 1,000 tomorrow. When you have no idea what you're doing, you train yourself poorly. I don't want to make money and have knowledge gaps. I don't want to lose money and have knowledge gaps because emotions step in and wreck your thinking. They screw you over, and their whole job is to say, hey, you know what's going on. Don't worry, uncertainty's not real, and you will slaughter yourself. You need to know who's paying you as much as you need to know who defeats you. You cannot win a battle with somebody you don't know. It will destroy you over the long run. And that's what most traders neglect. They think profits are the only thing that matters. And when it comes to being a resilient, discretionary day trader, it is understanding that matters. Profits do not. You can make and lose money, but you can't unteach yourself bad lessons that destroy and sabotage your behaviors and thought processes. You need to know who's paying you and who's not, who's killing you and who's not, who's winning, who's losing, where are they going, so that you can value what matters. You need to value what matters. You need to say, I like driving bears out of the market because so do bulls. And so if you value profits, you're valuing the wrong thing. You need to value taking out the counterparty. You need to value pumping tension. You need to value liquidating institutions. And then you need to take trades based on the things that you find that you value. You'll find much greater success chasing the narrative than you will ever find trying to boost your statistical probability of success based on back testing. And maybe you have a different story. Maybe you have a different thing that you could say, well, I've been doing this for 10 years and statistics have just been the golden egg. You are an exception to the rule. You should write a book. Because I never hear that story. The one I constantly hear from traders day in and day out is my favorite person that I'm following. Well, maybe go plug it in. Your favorite guru told you he made millions and I did everything he did and I lost all my money. That's the story you hear. My favorite indicator that has a 99% success rate. I traded it and I lost money. By design, that's how it works. Statistics tend to betray you. Statistics, if you ask a statistician, are the way that you lie with math. So I don't know why we all depend on statistics. The Simpsons paradox, go learn about the Simpsons paradox. Go Google it. Potato paradox, go Google it. These are two of the most popular ones to betray you in the market. They're the ones that say statistics high, profits none. Statistics high, go look at them. I'll tell you again. Simpsons paradox. It's the one that screws us over when it comes to buying medical procedures. You go in for a $500 test with a certain probability of it being accurate. You need to actually pay for that test like 5 or 6 times usually before you actually know if you have a disease. And your doctor only gives it to you once. Turns out that's not how probabilities work. No, you got to go plug it in. Here, go plug this in right there. Oh, you broke the port. Oh, it's broke. There's no batteries. This is a lithium ion. Anyway, go learn Simpsons paradox, potato paradox. If you don't know how to use them, I'm helping you. Go learn them. Go try and learn them well enough that you can see how that they function in your indicators and your tools. It's how the market works. Anyway, the story I want you guys to tell is to say, I understand what's going on. And then when you see events in the market, like maybe some higher volume in options, or you see the VIX move in a direction, or you see a big order hit the order book or something like that, or you see different, you could say, oh my gosh, I know who that is and I know what they're doing. And you'll interpret it correctly instead of saying, oh my gosh, a large scary thing, I'm going to flip my cortisol on, get scared and do things I regret tomorrow. I don't want you doing that. I want you to understand things correctly so you can behave correctly and so you can be resilient to things that are just counter signals and they're wrong. And you could say, no, that's not right. This is not going to work. That's what we want. I want a group of people who get it. And then they say, yeah, oh my gosh, I made money. I love that because I'm like, hey, you're understanding, especially when I see that you made money at the right time. You're like, yeah, I bought this here. And I go, I know exactly why you bought that. If it's clear why you traded where you traded, I love that because it tells me you get it. So anyway, that's my spiel about this method and what its purpose is and stuff. And hopefully you'll watch and rewatch and my spiel and seriously consider your actual level of understanding when it comes to what's really going on in front of your face. And consider if that's something that matters to you. If understanding these tools or understanding what institutions are doing would matter to you so that you know who and what and when and where. If that does, you should put in, if I had never done this before, if I had to start over, I would spend night and day studying this strategy for at least 2 weeks. I would do nothing else. I would build the mental models to understand what these things mean. I would start to populate those mental models with events. I would start doing everything I could to predict the next thing. I would constantly say, what's next? Constantly, what's next? If the bulls came in and the bears are here, what's next? What does that mean? What makes sense? Where should this go? You should cast your eyes into the future, always into the future. Ignore the past. There's nothing for you there. The past is done. It's dead. There's no profits. The present, there's not profits in the present. Profits are inherently a feature of the future. The fact that you can see the future is the fundamental feature of a human being that allows you to take profits.
Yeah, but
So,
that's it.
oh, wow, you ripped it apart and did.
Help me fix it.
I will because I'm impressed that you did that. Good job. Now that was some good work, Pierce. Okay, so those are some of my thoughts. I hope this was useful. We'll keep an eye tomorrow. I should probably go over that really quick. So if we get our bulls came in here, I think there wasn't enough time, or we're not seeing much of an impact, but I think the grind up we're going to liquidate this position. We're going to be pushing out the high. And I think the end of this is going to be these bulls want to push out the bears who started this whole shenanigan a couple of days ago on Tuesday, right there. So I think we're pushing out that high, 31.45. I'm calling it 31.45. I think that's the goal. Get us up there, take out all those stinkers from earlier. The bulls put their foot down here. That's what I see going on. So tomorrow, we're going to be looking at immediately is getting this over zero. There will be a moment where we get a zero test for the bears. And they're going to have one chance and one chance only to see if they can do this. And I think that's what's going to happen tomorrow morning. Immediately, we're going to look at that and go, so are you guys going to do something? That's what I think is happening right now. Now, if this moves down, if the bears decide that they just want it, again, we'll get another zero test at the open, even if this moves down, and we're going to get another sample, and I anticipate bulls defending that. So in either case,
Daddy.
I think the bulls will be active tomorrow morning. And so that's what I anticipate. I think this should be moving up, opening higher tomorrow, and we're going to be just looking to knock people out, get this tension up higher, get it over zero. That's what I want to see. That's what I'm anticipating. So that's where we are. Keep your eye on it. Make sure you use your tools after you understand what's going on. Beg you. Make sure you get an understanding first, then grab your favorite tools and go, oh, and align them with the narrative, the story about what's happening, and then operate from there. Okay? I'll see you guys tomorrow. And great questions today by everyone. Okay, bye.